What is the market outlook for property investors and developers in 2020? In this series of 5 videos, I'm joined by 4 renowned property experts, and in each video, each expert will share with you their predictions for what the 2020 property market has in store for you. This is a must-watch. And you're going to want to be taking some notes and sitting down with a cup of coffee and watching all this series of 5 videos. Before we get started, remember, if you're new to this channel, make sure you subscribe and hit the bell icon, because we release new content each and every week, and everything is dedicated to helping you be more successful in property. Also, smash that like button, it really helps us out on YouTube. And also comment down below whether you agree or disagree with what's being said. Comment and let us know. First up, in part 1 of this 5-part series, we have David Clouter. David Clouter has been investing and developing properties since 1982. He has lived through many property market cycles. He's quite an expert on property market cycles and timing property activity in the market cycle. He's a speaker. You may have heard him speak at many events. He's an author as well. He's a former journalist with the BBC. So listen up to what David Clouter has to say in terms of his predictions on the market outlook for 2020. Enjoy.
One of the things that happened in 2016, there was some kind of referendum about something, I don't try to forget, and as a result, sterling kind of adjusted, so now we see a situation where for dollar-denominated buyers, London property is about 40% cheaper than it was in 2014. So there are bargains to be picked up for those who don't live in the UK. So one of the questions I think to ask ourselves is, why has there not been a stampede to buy all this value property that is in London? Certainly we haven't seen the kind of volumes that we might expect from a situation like this. So there is some degree of uncertainty that has stopped even contrarian investors such as myself from taking the plunge. I was at the front of the queue in 2008, 2009, buying below market, getting 20-30% off my deals, because I'm a property cycles kind of a guy, and I like to invest in a contrarian fashion. So I like to, I know John isn't a great fan of the sort of property cycle concept, but
we'll get to that.
In a sense, let's call it value investing then. So when the numbers stack, which tends to happen more often on a cyclical nature, in my view, then I'm out there with my checkbook. And so I was getting discounts of the kind that hadn't been seen for an awfully long time, just after the credit crash. Let's agree to call it that. But I haven't been reaching for the checkbook again, because in a sense, I think
checkbooks anymore.
I'm a guy, who doesn't do online banking, and so I'm from that sort of from a different generation.
Yes.
There are reasons which we might go into later as to why I've held back on this occasion, because when you've got a financial meltdown, you kind of know where you are and you know how it's going to pan out. There's a wonderful book actually by a guy called John Kenneth Galbraith called The Crash of 29, which explains how every financial crisis has different causes, but they tend to sort of play out in the same way as politicians smooth the waters. They have to kind of calm everybody down to make sure that there are not too many knee-jerk reactions and repercussions. They do this in similar ways. They've all been to public school, which interestingly in England are private schools, and so they've all learned history and they all know how to sort of do this. So these things tend to sort of repeat. By coincidence, I was reading J.K. Galbraith's book. He's a fabulous author, was a wonderful economist. And so in order to work out what was going to happen in 2009, 10, 11, I just looked at what happened in 1930, 31 and 32 in his book, where he sort of described in great detail how it was going to pan out. And that really helped me on my sort of investment journey. At the moment, there are more. Oh yes, you missed the little announcement at the beginning there, Ranjan, about telephones. There are more factors at play now than I've seen in the whole 38 years that I've been investing. So I'm holding off a bit, not so much because of the outcome of Brexit, because of possible changes in Westminster, which might lead to an administration, shall we say, that is far less friendly to property investors than we've seen for a couple of generations. So I think, and I think that's perhaps something that has caused overseas investors to hold back on London rather than the whole Brexit thing. That's just my personal opinion, and we'll discuss that again later. But I've taken my foot off the gas for a bit. But next year I expect to be going full pelt. So that's just me. There's also a situation which we find in the prime residential, and here we are in the middle of prime, probably super prime part of London, in that you don't tend to get many distressed vendors in these kind of markets. So when markets do take a bit of a tumble, when properties take a bit longer to sell, when there are market corrections in places like this, in places like Cambridge where I invest, in the other place, Oxford and so forth, people just pull their properties off the market. So the markets are contracts and they wait for things to correct. Nonetheless, there were superb bargains happening after the credit crunch because everybody was in a real tears then, and it was possible to capitalise on that. But we find now that the only people who would actually put stuff on at the moment are people who are experiencing the traditional things of bereavement, divorce, inheritance, these kinds of crisis opportunities that happen for some property investors. Another question is this, I'm just posing these as questions now, which my fellow panelists will answer probably at 8:15. UBS recently looked at 15 major cities all around the world, and they ranked London number 1 on what they called a bubble index with a score close to 1.9, which is really, really high. They observed that between 1985 and 2009, whenever this particular index exceeded the score of 1, and we're way above that now, there was a real price correction of, on average, 30%, which would begin within 3 years, and that's with a 95% certainty level. We've got the situation now where your average Londoner is earning, maybe £35,000 a year. It's maybe take them 6 months or something to save up that deposit. At the end of it, they're going to find themselves able to buy, say, a third of a property. So there are real affordability issues here in the marketplace, which over the length of time that I've been investing, we haven't really seen it get quite this bad. So what happens when something like that occurs, when there is a situation like that? Normally, overseas investors pick up the slack, but if they're not, then we might be heading for some kind of major price correction. That is a possibility at this point in time. We might, these are all possibilities, we might be in line for a base rate cut. And what would that mean to us as investors? It would certainly mean that it was less expensive to buy these super expensive properties. But again, would there be an appetite, and how long would that take to feed through to the general market as such? And then there is this Brexit thing. One thing that hasn't really been discussed about Britain's possible exit or not from the European Union at some unspecified future date is the right to rent checks. How will this obligation upon property investors to check that the legal rights of their tenants to be in the properties, how will that affect citizens of the European Union at a point where the migration rules will be changing? So this could massively reduce the potential tenant pool, which again might have an impact on investors in terms of lengthy voids and this kind of thing. The wild card, climate change, which is a favourite of my friend Fiona here, is something that many scientists believe, probably the majority of scientists believe, is on the way. and we've denied this for many, many years. Things are sort of changing. We are seeing some extreme kind of climate events now. We are seeing ice caps melting and this kind of thing, and you can go online and you can find maps of the UK whereby you can map what would happen if the sea level rose and how many bits of it would be an island. I'm based, my investments are in East Anglia, where probably about a quarter of it disappears underwater. And for example, my friend Fiona's town here of Ely becomes an island surrounded by water. So all those buy-to-lets, they have to swim to work in the morning and this kind of thing. So that potentially might be an issue moving forward. There might be sort of migrational effects that happen as a result of that. And I think, you know, for those of us who've got young children now, if they're in their 20s, I think during their lifetime we are likely to see seismic, unprecedented changes in the way that people live their lives. There'll be more sort of eco-homes for sure, but we might see a changing coastline depending on future governments' willingness to invest in protecting coastlines. Clearly they'll need to sort of replace the Thames barrier here in London and this kind of thing, which if we didn't have it now, we'd all be underwater here. So it will be a constant battle as climate change starts to take effect, because this accelerates, and once things happen like the permafrost starts to melt, releasing all the methane and so forth, then the whole thing accelerates. So it is something that we as investors need to focus on. We've seen corporate landlords taking over the sector. This has been, as I travel around the country doing talks, I pull into railway stations and I look out the window and I see lots of new buildings, very often close to railway stations on land that had previously been idle. It's certainly the case in my local Cambridge, where we have a £1 billion investment that's nearly complete. Corporates have suddenly decided that an 8% yield or whatever is okay, it's worth going all in on. They're doing deals with educational establishments whereby suddenly all those student HMOs are empty, and obviously that has a knock-on effect on the residential buy-to-let market. I was coming on the train to London today, just crossing Holloway Road in London. There are masses of student accommodation, in almost like a whole city there, built trackside, which impacts the kind of smaller landlords who have already been affected by tax changes and changes in legislation like that. So that is another thing that we have to look at. I mean, where is, for example, where's the corner shop? They're not around anymore, and they've been taken over by all the Tesco's and Sainsbury's and Asda's and other brands are available. So that's a thing. Modular housing is another factor, something else that's on the way. Prefabs are more popular, perhaps in Scandinavia than in other countries, but increasingly it's great to have everything arrive on the back of a lorry and all be erected in a week. Shops like Tesco when they build the small ones, they call Tesco Express, I believe, but when they put their small shops in, they're increasingly constructed in a factory somewhere else, and they're brought in and slid in a day. That they just sort of measure up the unit and they're good to go. But we're likely to see similar revolutions like that in housing, in the way that our things are built. We might even be 3D printing houses. So I think we're going to see real changes in the way that accommodation is physically put together. And as I mentioned earlier, I think we're going to see far more eco-friendly homes. I think it's going to be a matter of necessity. So, for example, gas will be out, won't it, within a couple of decades, and this kind of thing. And so big changes as far as that is concerned.
And tech in houses as well.
And
tech.
Oh yes.
Smart houses.
Yeah, tech and smart houses are going to make a very big difference to the way we lead our lives too, and that is, this is the decade where all this stuff is going to be happening. We've just sort of read about it in kind of science fiction books up until this time, but the technology is there and the will is there to implement all these kinds of things. We're all driving around in our electric cars now, those who don't have push bikes like me, and so these kinds of things are going to happen. Will house prices across the UK continue to rise? I mean, when you make investments, they always say past performance is no guarantee of future performance, and so Will this finally be the decade that stalls things for a bit? I remember the 1990s when we had George Soros, the international investor, betting against the pound, combined with the then Chancellor, who was Nigel Lawson, Nigella's dad. He introduced a restriction on mortgage interest relief that people could claim, but he announced this about 9 months before it came into play. And the result, fundamentally, of those two things were called MIRES. The result of those two things was that property in London took a real kicking, so that throughout most of the following decade, most of the 1990s, the market was flat. From about 1990 till about 1998, all my investment decisions could have been done on the back of a cigarette packet if I was a smoker, but in my case, at the back of a postcard. And so I had metrics. I didn't need to use my customary spreadsheets, and I was able to do viewings, shake hands and buy things very, very rapidly without watching too many numbers, because I knew the numbers that worked for me in my business, and they were constant. And it was quite a shock then when the things started to change and the dynamic altered again. I had to sort of adjust to that. And remember, again in Japan, they had a long period of stagflation. So just because we're an island, and just because there's a limited amount of land and building space, doesn't mean that things might stall in that kind of way. And it's important to remember, as I think it was John saying on Sunday when we met up, that the UK hasn't always been a nation of property owners as we believe it has been today. That this is a relatively recent phenomenon, but I'll leave you to talk more about that in due course. And then prop tech has been a major influence on us. We see kind of Airbnb now, all that kind of thing, but people now are talking about the equivalent of Airbnb on steroids, whereby the expectations of future renters, because of opportunities opened up by online, may skyrocket now, so that people expect every few months to be moving, and employment, and we all sort of work from home now, and employment things change and people move around. People may come to expect now being able to move from one fully furnished, fully equipped thing to another similar kind of unit somewhere else very quickly and with very little friction. And that is something as well that our modern technologies may enable.
If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing!